What's up, guys? Welcome to my channel. If you're new to the channel, my name's Thomas, and I've been actively trading and investing in the financial markets for about 6 years now. I originally got into the markets around the COVID time because I was self-employed, and I saw that as an opportunity to learn more about the financial markets and actually get involved so that I could set myself up better for retirement. And if another type of pandemic or something else happened that basically shuts the world down temporarily, that I would be able to, survive a little bit easier with less worry and stress and come out of it better financially instead of worse. So I highly recommend anybody, especially if you're self-employed, to take the time to study the financial markets, learn how they work, and at the very least, learn how to actively invest for the long term so that you can have your own retirement account. Even if you have an advisor at a firm or somebody that's actively managing a retirement account for you, or if you have a 401k through another job or anything like that, even if you already have a retirement account, I highly recommend you learning about the financial markets and learning how to invest for the long term so that at the time of retirement, you don't only have that one retirement account, you have a second. Plus, within those first few years of you actively managing your own, you learn so much that you can literally set yourself up way better in a shorter amount of time. So it's really important to learn that, like I said, especially if you're self-employed like I was and I still am. But when I got into the markets around that time, and the more I learned, the more I studied, the more obsessed I got with it. It just really interested me, and I've stuck with it ever since. And I still actively manage my own retirement accounts. And like I said, I actively day trade every single morning that the stock market's open in the Nasdaq futures. So this last year of actively day trading, I have had my main focus on getting better at reading price action and just catching all the little things with the price action that I might have missed with my longer term trades and timing my entries and exits for my longer term investments. So the whole point of this channel is for me to share what I've learned these last 6 years so that anybody else that's self-employed or just anybody else that wants to set themselves up better for the future or set up an investment account for their kids, whatever it might be, that's the whole goal of this channel, is to just share what I've learned. Because a lot of what I've learned the hard way. I've taken some losses that hurt, but I just kept learning, figured out what I did wrong, recovered from those losses, and now I'm just getting better and better at compounding my money, growing my money, getting better and smarter and wiser about managing risk, when to enter and exit trades, and just keeping up with the economic data, what's going on in the news. All this stuff works together so that you can make decisions that have the probabilities of your trades more in your favor, and help you manage your risk. So with all that aside, the goal of this video is just to share my thoughts and opinions on the current status of the stock market, the overall stock market, the crypto market, and gold. And just know that everything in this video is my thoughts and opinions based on my experience. Nothing is for sure when you're dealing with these markets. A lot of different things factor in to the price action, and price moves based on what the people that control most of the money are doing and why they're, what's going on geopolitically, what's going on in our economy. Is the president saying crazy things on the news? All of this stuff can affect the price. So just know that just because I think the market's going to do one thing, that doesn't mean it's for sure. But I'm basically just basing my thoughts and ideas on my experience. And when you're trading, you're collecting as much data as possible, and you're just trying to make a decision with the probabilities higher in your favor. And then there's always a chance that the market goes against what you think. So that's where you just have to have proper risk management in place, so that when you do lose, which there will always be a chance of loss, and if you're in the markets for a long time, you will always have a loss from time to time. The goal is to minimize those losses and maximize the winners. So just to get all that out of the way, this is not financial advice. This is just my thoughts and ideas about what the markets are currently doing as of February 1st, 2026. So let's hop into the charts and see what's going on. Okay, so this is the chart for MNQ. This is the micro E-mini Nasdaq futures chart. This is what I day trade every day. But you can look at this chart or Nasdaq 100, QQQ, QQQM. They're all the Nasdaq. There might be slight differences on the charts, but they're pretty much the same thing. So I'm just going to stick with MNQ because this is the chart I look at the most since I day trade it every day. But let's go back to April of 2025. This is where we had this massive sell-off due to fear and uncertainty that was in the markets because of Trump talking about possible tariffs, because a lot of people knew tariffs and all this uncertainty could potentially hurt the economy. But the main thing is it created a lot of fear and uncertainty. People didn't know what was going to happen. So a lot of people panicked, because if we have a lot of strict tariffs and we get a lot of other countries upset with us that don't want to make certain trades with us, it can mess up a lot of stuff, and the whole economy can be affected. So when there's trillions of dollars at risk here, a lot of people are just like, screw this, I'm getting out, I'm not leaving myself open to all this risk. So a lot of big smart money players just get out until things are more clear and more certain. And that's what happened here. Price dropped below this resistance below this support level here. It was resistance here. We broke above it, became support, and then once again it held up as support. So a lot of demand here. The way smart investors look at this, if we have a crash or a huge pullback in the markets like this, somewhere around 26 or 27%, a lot of people with cash on the sidelines are going to say, oh, we might have crashed here, but I'm going to go ahead and buy here in case we recover. And if we don't recover and we have another leg down, I can buy more down here, and then that puts their average cost down here. So but as you can tell, this dip got bought up big time. We had this huge bullish candle here that forced us right back up. So a lot of investors probably went in very heavy right around here, and then on this pullback, and we had this big bull bar here, that white bar there. That's when those investors and others went in even heavier. So massive volume came in right here, and that sent us on this spike right here, and then in this strong trend or channel right here. So we exploded through the 200-day moving average, this darker blue line here, and as you can see, we have not retested it yet. And this was May of 2025. So we're only 3 months away from it being a year since we broke through that. So usually we will retest that 200-day moving average within a year. So usually 10 or 12 months is about when we'll retest that. Because like right here we had March of 2023, then we had October of 2023. So that was only April, May, June, July, August, September, October. So that was only 7 months, and we came back and retested it. But from here, October of 23 to August of 24, so that's 10 months. We went 10 months, and then we retested it. And then we got a quick retest once again, and then of course we crashed through it. So since we are, let's see, May to January, we're only, I think we're overdue for a test of that 200-day moving average. So I see us retesting that at some point in the near future. It doesn't have to happen next week or next month, but sometime within the next few months, I would expect. But another thing to look out for is right here. We just formed a potential double top on the Nasdaq. So this is potentially a reversal pattern. We had a double top here, coincidentally, right before Trump started talking about tariffs. So just be aware that we could have some kind of crazy news announcement that could make us crash down again. We could come all the way down here and retest this, maybe get a spike up, retest the 200, then go, continue our move to the upside. Or we could just have a pullback, tap that 200-day moving average and then continue. And that's why I have this purple line here, because I think that's a very high probability for that outcome. I don't think we would crash below the 200-day, but we could, depending on what happens in the news and just the overall economy, we could see something like that. But since we had such a big flush out in the markets right here, I don't think we'll have another move that much. But even if we just dropped from where we are to the 200-day moving average, that could be anywhere from a 4 to 6% drop. If we just barely dip below the 200 and maybe hit this gap right here that I've got marked with this box, that's an 11% drop. All that's possible, because when you have a trend and you have all these lows here like this, there's a lot of liquidity sitting up under these lows. So there's a lot of people with stop losses under there, people who buy the dip on leverage, or they just go in heavy, even if they're not on leverage. They could be putting stop losses under these lows, and once you get millions of people putting stop losses up under these lows like this, those stop losses are technically buy orders, and the market is going to go where the liquidity is. If we run out of demand and the market slows down like it has up here as it's been going sideways, if the market needs more liquidity, more people buying, willing to buy to keep the prices pushing higher, then we could drop down there, grab all those buy orders from the stop losses, plus big smart money investors. They might buy the dip. So with them buying the dip, all the stop losses being hit from probably mostly retail traders, that could give us enough liquidity to push us up for another whole leg up. So that's pretty much my thoughts on the Nasdaq right now. But one more thing, where I have this orange line, this is kind of just like a center line for this little sideways range, and we're sitting right on the 50-day moving average, this white dotted line. We've got the 100-day moving average, the 100-day moving average right here where this blue dotted line is. So these are important levels. If we break those with momentum, then there's a very good chance we come down and retest the 200. So this 200-day, it's probably going to trend up something like this. So, we could have a pullback like this purple line here. It's very possible. Worst case scenario, we get some kind of crazy news. Everybody panics, we drop to there. But either way, if we have a pullback to the 200-day, which I think is very likely, I don't think we stay down there very long. I think we would probably see something similar to like maybe this or this, maybe a quick V shape. We could get a double tap on it like this. You know, we could tap the 200, bounce, come back down and retest it. And then we may go several more months or another year or longer without touching it again before we enter an all-out bear market. I don't think we're as close to an all-out bear market as everybody is thinking. A lot of people on YouTube's panicking right now. But, you know, this was an all-out bear market back here. This lasted, this was a bear market. You know, Bitcoin peaked, let's see, November of 2021. The stock market peaked, and then everything went into a big bear market. And I don't think we're as close to that as a lot of other people are thinking just yet, but like I said, anything's possible. But since we had this big flush out because of the tariff drama, I don't think we're ready for a big all-out bear market just yet. You know, this bear market, once we actually broke down here, this actually lasted for, let's see, 356 days. That's trading days. So, you know, I don't think we're ready for that yet. You know, we peaked right there like November of 2021, and we didn't really break out of that bear market until February of 2023. So, you know, a couple of years of downside. I don't think we're ready for that yet. I think we're more than likely going to retest the 200 and then continue higher. But like I said in the beginning of this video, always just be aware that you could be wrong and the market could do something you don't expect. So I'm not saying go all in if we get a touch on this 200-day moving average. You have to see how it reacts, see if we get a strong bounce off of it, see if we get a retest, see if it gets a strong bounce off. You know, and once you see some strong, clear momentum, like, you know, a move like that a bunch of bullish bars in a row going straight up, just like here, then you know that's a strong move going up. You know, if you get a move like this where you get strong candles breaking through it and then it fails to get through it again, then we could possibly enter something like this. But it's just a big game of wait and see, and just wait until the market tells you what it's doing, and then you just react to that. So my current thoughts on the Nasdaq: if we can hold this 50 and 100-day moving average, if we can hold this, then I think we could continue up, just like a slow grind, strong bull channel, something like that. I think that is doable. If we lose the 50 and 100, then I think we lose that red line right there. And then I think we might retest that, come down, retest right around this area, because I think that's about where the 200-day moving average would end up being. And then, you know, maybe go up from there. Maybe go up, come down, retest the 200, and then go. So that's my current thoughts on the Nasdaq. Potential double top, potential drop coming in to sweep the liquidity under these lows, to retest the 200, and as you can see, I've got this yellow line marked here. So this is just a little contraction area. So this is a potential institutional level where institutions, big money players are willing to buy. So this is kind of like an agreement where they agree that it's a good value. So, if we get a quick spike down to the 200-day moving average, we could have a wick, something like this, that actually spikes through and then gets some orders filled at this yellow line. That's a possibility too. So right now on the Nasdaq, I'm just being cautious because of this potential double top, because we had 2 days of strong selling right here. We had a lot of buyers step in right here on this candle on Thursday, but Friday had a strong close right here. Now this is the futures market. If you go to the Qs, on the Qs we kind of have a contraction area here, and we could, it looks a little bit better, but it's still all the same. I've got these liquidity zones marked on this chart, so this is where there are potential orders, and then there's more down here under this wick. So let's go back to futures. So this is what we got to be aware of. If we cannot hold this area, then I see us breaking down, possibly to here. And then I would expect a pretty strong move up, maybe something like this. And I think we could trend up for, quite a while. It just depends. I mean, right now, the Buffett indicator, GDP compared to the total value of the total stock market, whatever. A lot of these indicators are showing that we need a big pullback in the markets. So, and the technicals, like I said, the potential double top there. There's a lot of things showing the potential bear case, but a lot of the big tech stocks have already pulled back quite a bit. Some of them have not. So there's kind of a good argument for more upside and an argument for downside right now at this current moment. So we've got some data coming out this week. So a lot of investors are probably waiting on that. So I'm more of a technical trader. So, of course I'm going to watch the data, but I'm more interested in seeing what these candlesticks do this next week. If we can hold this level or just barely get below it and spike right back, then I would say the chances of going ahead and continuing to the upside are pretty strong. But if we get another day or two of strong bearish candles breaking through these levels, then I would say a test of that 200-day moving average is very likely. And if that 200-day doesn't get a strong bounce immediately within a couple of days, then I would say that, we have the potential to drop maybe down here to 21.9 on Nasdaq. So that would be something like this. We could drop all the way down here and then continue. That's possible too. So now, since I've gone over my thoughts and opinions on Nasdaq, let's go over to gold, because the gold chart is going to have a lot to do with what I think is going to happen with Bitcoin and the overall crypto market. So here's the gold chart, the daily time frame, and as you can see, Thursday we had this huge, it's almost like a doji, but it's just a huge indecision range candle. A lot of people were buying and selling here. There was a lot of transactions going on here. A lot of people were probably still buying in because they saw the strong close on this candle. And a lot of people here were pretty much saying, okay, we've already broke 5,400 and I've been in since down here. I've made a crap ton of money, so I'm going to go ahead and take my profits. So a lot of people bought here, and a lot of people up here are the ones that sold to those people. So, and then the Friday candle, this Friday candle just in one day dropped 14% on gold. And you're talking about trillions of dollars. I don't know what the actual current market cap is, but it's trillions of dollars. To drop 14% in one day, that is basically saying, okay, this was a blow off top. The market's been parabolic, peaked out. You know, this is where we peaked right here. A lot of people sold here, but there was still enough demand here to push us for another huge leg up. But right here, this is most likely, in my opinion, not financial advice, but my opinion, this is the top for gold for quite a while, in my opinion. Now, I'm not saying we're going to dump straight down from here. You know, on a chart like this, with that wick, a lot of people obviously bought, or a lot of stop losses were hit, but you know, we could do something like this, work our way back up, grab some more orders that were here, and then have another leg down. You know, and then we could go sideways for a few years. I don't know. We could do that. We could go ahead and crash. I'm not trying to predict the future, but all I know is I have short positions. I've been building short positions on gold for the last few weeks. Probably since we were around here when we made this new high right here. You know, I didn't know if that was going to be the absolute top or if we had another leg up, so I just started kind of averaging into some gold short trades because I knew that this parabolic run could not keep going forever. You know, you go over to the weekly chart and we've got a huge bearish divergence here. Right here we peaked, and if you look at the RSI, and then you go on to this candle from last week, huge volume spike, so a lot of transactions took place there, and we formed a lower high on the RSI. So that's diverging from this, so that's a bearish divergence. Now those don't mean that price is going to just crash instantly as soon as that indicator flashes, but it does mean that momentum has ran out, or potentially has ran out, and that there is downside possible. So like I said in the beginning of this video, nothing is for sure. So there's always a chance that I'm wrong and we do push higher. You know, I don't think we would go much higher, but you know, let's say I'm wrong and it keeps going. That is possible. Sometimes when that divergence indicator flashes, it can take some time before the move actually plays out. But with that huge candle there on the daily, and with that type of candle there on the weekly, I would almost expect, let's see if I can erase some of this stuff. I would expect most likely that this week's candle, that's not a straight move down. It's hard to draw with that, but I would expect this week that we're about to start, I would expect the candle to do something like that, maybe close pretty strongly to the downside. That's just my opinions. You know, these indicators here, the 50, and I'm not sure what this one is that I have here. I got different averages on different charts, but you know, these charts, these indicators aren't looking like they want to just roll over and dump just yet. So that's why I'm thinking there's a possibility that we do something like this, maybe drop, maybe chop around sideways, and then have another drop. Okay? So that's very possible. The weekly chart doesn't look like it's ready to just drop just yet. And even the daily chart, as of right now, these indicators right here, the 50 and the 100, they're still spread apart quite a bit. So I would imagine we have some kind of pullback, maybe some sideways action, until we see these indicators kind of pinch together like they did back here, and until they start kind of rolling over like this, you know, something like that, then they cross maybe. Something like that. That's kind of what I'm expecting. But don't think we're going to just crash down instantly. That's why I said I've been slowly averaging into a gold short, because if we do chop around and do something like this and then drop and then do this, you know, I'm going to be buying more, adding more to my short trade at least, because I'm buying an inverse ETF that shorts gold. So, you know, I'd be willing to buy more of that up here, so that when we finally do get a dump down on gold, that, you know, I can have the best average price possible. So, alright, now how does this relate to Bitcoin? I know this is going to be a pretty long video, but anybody that's actually paying attention to this stuff and actually wanting to learn, I think this is a good video for you, and I'm trying to explain it the best I can. If you're not really that interested in this stuff, then to you this is probably just a long, boring video. But the technicals don't lie. Everything that's gone on in the world up to this point, plus what the big smart money players think is going to happen in the near future, is all factored into these charts. So if you can figure out how to read these charts, then you have a pretty good idea of how to protect yourself, of the different potential outcomes. You know, just like I said, we could come down, we could chop around back up, come back down. You have to keep in mind that there's not just one possible scenario. We could literally crash straight down on gold right now. We could. But, you know, we could also get a strong bounce, have another whole leg up. You know, maybe this isn't the absolute top. We could push a little higher, form a double top, you know, something like that, and the next leg up, go a little higher, just above that. That's a possibility. So like I said in the beginning, nothing is for sure. There's always a few different possibilities for outcomes, so you got to prepare yourself for all these different outcomes. All right, so let me go over to the weekly chart on gold real quick, and I just want to show you something. So this goes all the way back to, this goes all the way back to like 2015, 2016. But if you look at this pattern, I'll move this up. I just want you to take a look at this pattern. So gold had a low right here. Gold bottomed out. And then we started this huge bull market. We've literally been in a bull market on gold since 2015, 10 years. Now this is one of the biggest assets in the world, trillions and trillions of dollars. So it takes a lot of money to move this asset, and it takes a lot of time for these moves to play out. But these patterns repeat on different time frames across all asset classes. So mainly what I want to show you on this is just the pattern of this. And then I'm going to line this up with Bitcoin since the bottom of the last bear market, and just show you the similarities on how price acted and potentially what we could see from Bitcoin over the next year or so. So we bottomed out, and then we came up here. We peaked in 2020. We formed this bull flag pattern. Then we slowly went back up, formed another top there, formed another bull flag pattern, except we corrected deeper and broke this low here actually hit the 200-week moving average, so that's kind of a big deal. We broke back above it, pushed to the upside again, and we actually formed what could have been this triple top right here. I know that's kind of messy, too much yellow, but you know, 1, 2, 3, that's a triple top. A lot of people on gold probably panicked, and then we had this push down here with this strong candle on. This is a weekly chart also. So what do you think a lot of investors and traders were thinking when they saw this triple top pattern, and then we broke into this bearish trend, and we had this huge bear bar right here in September of 2023. A lot of people that just don't know as much about these charts probably went heavy short there, thinking gold's going to crash down. Next target's probably these lows, which that's definitely a good idea. That's a triple bottom. There's probably a lot of liquidity under there, possibly. That's a strong support. You know, you take this all the way back to right here. That's a strong support line. So they weren't, necessarily wrong for thinking that's a possibility. It definitely was, but we didn't break this low. We didn't get a strong close below this 200-week moving average. So anybody that was betting on that heavily, they got wrecked, because the very next candle was a huge bullish engulfing candle. That white candle here, it broke and closed above this huge bear bar. So this turned into a huge bull flag rather than a huge drop down to take out this low here. So a lot of people got wrecked there. And then that's when gold, after a huge triple top, this low broke below this low. We had a top here. Price failed to hold up here. We had a huge bear bar that broke the previous low here. So it made people think we're going to crash down, probably hit this low here. A lot of people probably panicked right there. And then what happened next? The biggest bull run you've ever seen for gold, ever. Gold literally ran from there to there for a 210% gain. And like I said, that's trillions of dollars. 210%. That is a lot of strength and momentum. And a lot of people missed out because they thought this was a triple top, and they thought we were crashing down like this. Okay, so this is where knowing how to read the charts and knowing how to be patient and waiting for the right entry signals when you're going heavy short or long, this is where that pays off. So how does this tie into Bitcoin? Okay, so my current thoughts on gold is we've hit a top. And if we haven't, we could go up a little higher. But either way, the top is either in or it's almost in. This parabolic run cannot continue much longer. I don't care what market it is. If it's a housing market, gold and silver, crypto, the tulip market frenzy from back in the day, anything. No market can keep going like this forever, because the higher it goes, the more scared people are to keep dumping money in it, because it becomes too risky. If you think about it, and you're trying to buy in right here at 43.75, and you think it might go back up to 5,600. Yeah, that's a pretty good gain. That's a pretty good gain from there to there. But I hope you have a stop loss, because if not, if this parabolic run is over, your downside is to here, because gold will possibly retest all that at some point. It might not drop that low, but there's gonna be some type of big correction on gold at some point. We could go sideways for 5 years. It's a possibility. But we could also crash right down there. That's also a possibility. A lot of people have been buying gold like crazy, and that's usually when a top is in. So all I'm saying is the gold run is either over or about to be over pretty soon. Okay, so I'm going to leave this chart pulled up, and then let me hide this one. And then we're going to come down here to Bitcoin's chart. So if we go back to the bottom of the bear market from last time in 2022 up to now, and we compare this price action on Bitcoin to this huge bull run on gold, compare these moves and let's see what we have in common. Actually, let me go to the total market cap chart. I've got it all drawn out better, but it's basically the same chart because Bitcoin is the majority of the market cap. So I've got the same pattern right here. So you go from the bottom here, it looks similar to this bottom. And then we had a huge slow grind up to this point here on gold. Okay, right? Let me get my marker back. Okay, change this to red so you can see it. Alright. You look at Bitcoin, had this huge slow grind up, and we formed this top here. And then we formed this huge bull flag pattern on gold before grinding back up and making another high. Huge bull flag pattern on gold, or on Bitcoin, and then we went up and made another high. Now this high actually made a new high. This one down here was about level, but as far as the flag patterns and the push up, it's very, very similar. It's still in an overall huge uptrend. So another huge bull flag, and then a slow grind up, another high. Huge bull flag, slow grind up, another high, huge bull flag. And then if you look at what Bitcoin's currently doing, we are potentially, not for sure, potentially forming another huge bull flag. And I think this one's going to be more like a expanding wedge, parabolic wedge, whatever you want to call it. But in my opinion, we're going to do something like this. I do think we have a little bit more downside because that bear bar from last week closed with so much strength. I think we're going to push down, maybe to here, come up and retest the top of this wedge, and then come down and maybe do a double bottom. Maybe we drop lower, maybe we hit way down here, but maybe the double bottom stops here. Either way, I'm expecting to push down lower and then probably form another lower low. But then I'm expecting a price reversal and something like that. All right, this is what I'm kind of expecting. Once again, nothing's for sure, but I think a lot of this money, where the big money players are getting out of gold, it's going to be a process. You can't just move trillions of dollars in a day. You have to generate liquidity, which means getting people, basically telling them it's a good deal so they'll buy all the gold from you so you can sell all of yours and then move your trillions of dollars over into a different asset. So I think a lot of this money that's coming out of gold and silver right now, and the money that's going to be coming out of there over these next few weeks, I think a lot of it's going to transfer back into Bitcoin and Ethereum and probably some altcoins too. The whole Trump administration is pushing crypto big time. Trump's been talking about how big crypto is going to be, this and that. And there's a lot of Bitcoin and Ethereum treasuries now. There's a lot of easy access for the typical daily investors to just be able to easily dump money into it. There's a lot of things that are pushing for, a huge move up on crypto in the future. And I think that it's going to be sooner than most people expect. And I think it's going to catch a lot of people off guard, just like this huge rally on gold caught people off guard. If you go back up here and zoom in on this section right here, this is the weekly chart, and you see this candle, or actually these three candles. I'm going to highlight this a different color. Alright, you see those three candles. So we kind of bottomed right around here, and then we kind of had this push down. And a lot of people, I guarantee you, were betting on way more downside. Just like right now on Bitcoin, we kind of came down right here. Let me get this zoomed in better so you can see it, see how similar it is. We had this push down, and we kind of went sideways, just like right here. We went sideways, and then we had that strong push. Right here on Bitcoin, we went sideways, and now we're getting this huge push. And it would not surprise me if this happens quicker than what I'm thinking. So, I'm thinking this move's possible, like I've got this blue line. But it would not surprise me if we do something very similar to what gold did here. So, maybe we have one more candle that actually does push us down to this line, spikes back up, maybe forms like a doji candle, something like that. And then maybe a huge bull candle the following week that pushes us all the way. That's not a good looking bull candle, but you get my point. That pushes us all the way back up, maybe to this level, to completely engulf this previous bear body here, just like gold did right here. That's very possible, because if you go over to this liquidity chart on coinglass.com. As of right now, we still have quite a bit more liquidity. This is the daily. Let's go to the 7-day. It gives you a better idea. Okay, so I'll leave this one at the daily so we can talk about it too. But as of right now, there's still quite a bit of liquidity down here where a lot of people are being contrarian probably a little bit too quickly. So 73.9. We're seeing a lot of liquidity down to 73.9. So on the Bitcoin chart, we're at 73.9. So there's quite a bit of liquidity right under this candle. Oh, we're below 70. Oh no, wait, I said 73.9. Yeah, 73.9, so we're not down there yet. So right where I have this red line, actually, exactly where I have that red line, there's a lot of liquidity there where a lot of these bulls are jumping in with leverage way too soon. You never want to just jump into longs thinking the bottom's going to just be in when, the bearish momentum is this strong. But I think we're going to drop probably to this red line or somewhere around in here. Everybody on YouTube right now is saying 65,000. And that's very possible. We could have a huge liquidation type wick that pushes us all the way down there. That's possible. But I'm thinking at least 73.9, a little bit below. That's what I'm thinking. Because of this liquidity chart here. You see there's a lot of liquidity there down to 73.9. But then this top chart here, this is the 7-day chart, and it goes out a little bit further right here where you can see all this liquidity to the top side. So this is where everybody that's heavy short right now has their stop losses. And you can see there's a lot of idiots right here doing 100x leverage around 84.8, 86.1, and it keeps going. So this tells me that in the near future we're going to see a push back up to at least 86,000. So where would that put us? That's going to put us right here. Okay, so if my theory is correct, and Bitcoin does repeat kind of what gold did here or something similar, it won't be exactly like that, but it could be very close, then that would mean that maybe we spike down next week lower, grab even more liquidity, probably form a hammer candle or a doji candle, and then possibly the very next week see an explosive push to the upside just like we did there to grab all this liquidity above 86,000 for Bitcoin. So this is what I'm thinking. And if you keep up with the altcoins market is bottomed out. And this is basically the Ethereum chart, but if you go to something like Doge, check out the Doge pattern. It looks identical to this one from the last bull run. And as you can see, we spiked above the triangle, and then we had a little zigzag down, curved around, started spiking back up here. And of course the pattern's bigger this time, the market cap's way bigger, so that it takes more time and more money to move the asset. So we pushed above the triangle, did this little zigzag here, and now we should be forming some type of bottom here and preparing to push to the upside. That's just me going off of what the chart's telling me from the previous bull run, because most of the time these patterns repeat in a very similar way. It won't be identical, but it'll be very close. You know, right here we had the COVID spike down. Here we didn't have that, you know, but we had some other spike down for some other reason right there. But now we've bottomed here. So I think the bottom is either in or very close to being in for crypto, and I think the top for gold is either in or very close to being in. And I think these two asset classes are going to have an inverse relationship for probably a while. So maybe since so many institutions are now into crypto and Bitcoin, we could see this become a new thing where they kind of just move money back and forth between the digital gold, Bitcoin, and the regular gold spot, and just buying physical gold in general. But you know, we could see an inverse relationship between these, because crypto gives these institutions just one more thing to rotate money in and out of. So as they're taking their massive profits on gold and silver, shifting them into crypto, mainly Bitcoin, then that basically gives them a fresh start for a whole new bull run for the next year to 2 years or whatever. Now that Bitcoin is so much bigger, market cap so much bigger, we could see a way longer, stronger Bitcoin bull run, and everybody that's all in super bear mode right now will possibly get wrecked if this is correct. I'm not saying I'm 100% right, but I have this feeling, and then based on what the charts are telling me, I think Bitcoin is setting up a move very similar to what gold did. I just don't think this bear market for Bitcoin is going to go quite as deep as everybody's thinking. I mean, a lot of people are saying 65,000. I think that's possible, but I don't think we really drop below that. If we do, not much at all, and I think we bounce back super aggressively. And I think we're going to be back over 86,000 possibly within 2 to 3 weeks, but you know, most likely it will take a while. But if we do what gold did, and if all this money that's coming out of gold and silver is going to go into crypto, then that move will happen fast, just like it did on gold. But that's just a theory. If you have any information with some kind of data I can look at to prove, either that I'm right or wrong, and that'll help me understand why I'm right or wrong even more, that would be great. Share some links, or if you can't leave a link in the comment, just comment below. Let me know where I can find that info. I would appreciate it. But as of right now, that's what I'm expecting. So everything I've covered in this video: Nasdaq, potential double top, potential pullback to the 200 SMA, potential drop a little bit below the 200 SMA. Okay, that's the short-term bearish possibility. Let's go into the chart real quick. All right, so short-term bearish possibilities: double top, quick drop down to the 200, about like how this purple line is, and then continue the bull market. Potential steeper drop down to around 21 to 22,000 on Nasdaq futures. Price will be different on like the Qs or whatever, but potential short-term bearish move for the stock market. That's what I'm looking at. Potential bullish move short-term on the stock market would be just something like this. We got to push above, retest, and then continue higher. That's completely possible too, because a lot of people are betting on downside just because of this double top. They're not being patient enough to wait to see if we actually start breaking below some of these levels, and they're piling in shorts because double top. But whatever. We might continue up, we might go down. Those are my potential scenarios for the Nasdaq. Now let's go back to gold. Kind of go back over this one more time. Potential top. That's a blow off top. In my opinion, we've reached the top, and now we're going to start seeing some type of distribution, potentially just a crash, depending on how quickly the big money institutions and everybody can get out of their positions. It could take a while, but if there's any upside left on gold, it's not much. So that sums up my opinions on gold. We've either topped or we're about to top, one or the other. I don't think we're going to continue this run for very much longer. I don't think it would continue the rest of this year. Even if it keeps going up, I don't think it would go up that long. I think it would just be, a few weeks or a couple of months at the max. But that's my opinion. Okay, then we hop into crypto, Bitcoin. Worst case scenario, we retest this 200-week moving average. Possibly dip just a little bit below it like we did here. That's possible. I don't think we would go much below that. I think we're going to see a lot of people stepping in to buy down here around 65,000. But the bearish momentum could force us down, but I think we would see a quick V-shaped recovery. That's the worst case scenario. My personal opinion, I think we're going to continue down for another week or so, probably form a doji or hammer candle, and then the very next candle, I think we see a spike back up to liquidate all the shorts that has liquidity around 86,000. Actually, we could pop all the way back up to like 90 to 92 within 1 week. It's possible. I think we will get back above this orange line here around 86 to 90, something like that, within the next couple of weeks, maybe a few weeks. But it's just looking too similar to the gold chart, and I think it's going to catch a lot of these big time bears off guard. And then I think big money is going to push it up like in a super fast parabolic way to where most people just miss out on the first part of the move. That's my opinion. And then just for a bonus to go along with this video, in case you made it to the end, if you've actually made it to the end of this video, then you're serious about this stuff, because if you're not, this would be very, very boring to watch all the way through. So let's hop over to the altcoin chart. So this is for all the people that just want to throw some money into some Hail Marys with the altcoins. You know, if you're buying a top 20 altcoin, you know, it's not that big of a gamble, but if you're buying anything that's not even in the top 20, then it's kind of a way higher risk, kind of like a lottery ticket play. But, you know, whatever. I think all of my crypto is in the top 20, and this is the chart for altcoins. So this is excluding Bitcoin, Ethereum, and stable coins. This is all just altcoins. And as you can see, we are currently right above the 200-week moving average. Now, I do not think we're going to go much lower than that, but like I always say, nothing is for sure. So just in case we did, this is where we would expect to go. This orange line. This would be our next stop. If this 200-week moving average and this red line fail, then we do this. We drop down and then we push up from there to liquidate everybody on their, you know, their crazy dog coins and whatever. Which not all of them are bad in my opinion. I have Dogecoin. I think Dogecoin's going to do very well. But this is what I'm thinking. Maybe a quick spike down, and then a huge spike right back up, and then we continue the crypto bull run. I think crypto has been suppressed because of that huge, the huge liquidation event we had. Let's see, it was the biggest liquidation day in crypto history. I want to say it was October or November. Maybe it was this day, October 6th. It was one of these days right around here. It was the biggest crypto liquidation event ever. A lot of people got their feelings hurt that day. A lot of people bought Bitcoin over $100,000, and now they're crying because they're watching their money go down, or they already sold at a loss of $20,000 per Bitcoin or something, which you never want to buy in at the top, but a lot of people do because they get on TV and tell you Bitcoin's the best investment ever, and then so people move their retirement accounts over to Bitcoin, go all in, and then you get wrecked. But if you're patient, then you'll let this bottom form over these next couple of weeks, maybe a few weeks, maybe a couple of months. I don't know for sure, but you'll let this form, and then you'll see how explosive we bounce up out of this, because once the majority of the traders are scared out, flushed out of their positions, that's when smart money, the big money players, they dump trillions of dollars in, and then they start the next wave up, and then other people jump in because they don't want to miss out, and we see the parabolic bull run. So this is what I think is going to happen. I don't know how high Bitcoin's going to go. I do think we at least hit 150,000, maybe 200,000, maybe higher. A lot of people say Bitcoin's going to hit 1 million, you know, by 2035 or something. So maybe they're right. Maybe this cycle we hit 200, 300. I don't know. But I do know it's going to go higher. I just don't know exactly when. But in my opinion, if you go back to the previous bull run back here, This was the COVID dump. We didn't see a dump like that here anywhere, but you can see this huge flag pattern. I think that is pretty much equivalent to this big flag pattern. If the crypto dump wouldn't have happened, then we would have seen a move like this. Or not the crypto dump, the COVID dump. The COVID dump, crypto dump, whatever. But let's see here. If we would not have, I'll just do it with this one. If we wouldn't have seen this COVID dump, then crypto, the Bitcoin chart would have done this. We would have went up, had a minor correction, we would have went up, came back down, and then we would have started that bull run. Okay, so here we didn't have that COVID dump, so we actually did go up, over, minor correction, and then we had this push up to make this other hump here, pull back, boom, it lines up perfectly. I think this pattern is just way bigger than this pattern. It looks very similar. The only difference is that COVID dump. Without that COVID dump, you would have seen that first hump and then that second higher hump there, like we had here. So in my opinion, it's the same pattern, very similar to the last bull run. And yes, this time we did dump below the 50-week moving averages. Here we held them, and then we pushed higher. And a lot of OG Bitcoin holders, that was their sign to get out. As soon as the 50-week moving averages were broken, they got out, that's a very smart move. That's the right thing to do. And now they're going to be able to buy in even lower. So they're probably reaccumulating. They'll probably buy heavy at 65,000, just like the smart money players. But in my opinion, that's where we are. Right here and right here. Whoops, that's went a little bit too big there. But right here. I think that's where we are. My chart's a little messy now. Hope you can make sense of it. But this is the overall pattern that I think is playing out. And it's just weird that it matches up almost perfectly with that huge bull run that gold's been in for the last 10 years. It matches up perfectly. It's just on a smaller scale as far as time. But it's the psychology of the masses, of the investors and traders. It's the psychology that creates these patterns. And the patterns are the same, whether it's a 10-year span or a 5-year span or a 4-year span or whatever. And I think the 4-year cycle is gone for the most part. And I think we're about to see the biggest crypto bull run ever. And I think it's going to be starting sooner than most people think. It could take some time. You know, if the stock market pulls back, you know, that could stall it. But here lately, crypto and stocks have not even been moving together anyways. They used to always move together, and then at some point they kind of started moving opposite. So I'm not even gonna, you know, put that much weight into what the stock market does. The stock market could pull back to that 200-day moving average or even lower, and Bitcoin and the rest of the crypto market could just continue up if all that money from gold and silver goes into it. So these are my opinions. This is how I'm managing my money. As of right now, my game plan is the same as it's been for the last 2 years as far as crypto goes. I've just been dollar cost averaging. Anytime we get a pullback to a value zone, I'm buying more and I'm just holding, because this crypto bull market will come. We will hit new all-time highs all across the board on crypto, and it's gonna all hit higher prices than anybody can imagine right now. And yes, there's a lot of different things that can happen that can affect it, make it take longer, make us see, you know, bigger pullbacks than planned. It's just a waiting game. Buy at a good deal and wait. That's what I'm doing. Let me know if you found any value in this video. Let me know if you even made it to the end. because if you really don't even care about this stuff, then why are you still watching for this long? Because it's probably super boring. But that's my opinions in the markets right now. I'm staying confident in my dollar cost average strategy, and it's working for me. So, my average prices are getting lower and lower as I keep buying in. And once I see this candle for this week, the futures market just, I think it just opened back up, or is about to open back up in a couple hours. So we'll see what the Nasdaq futures market does for this week. So it's just a waiting game. See what the weekly candle for Bitcoin does this week. See what the weekly candle for Nasdaq does this week. See what the weekly candle for gold does this week. Once the candles tell us what we need to know, then we can even go in heavier. So I want to see some lower prices get hit on Bitcoin, a doji or hammer candle, and then I want to see the next one or two, or the next few candles, preferably, be super bullish on Bitcoin. I want to see the gold chart continue to drop, form some kind of distribution, bear flag or something, some kind of solid sideways top. And then I want to see the Nasdaq either spike up, find a retest and find support at the current all-time highs, or drop down, retest what was support, turn resistance, drop down to the 200-day moving average, find support there, and then continue back up. So bullish, bearish, it doesn't even matter. I'm prepared either way, and that's how you should be. So subscribe to the channel. I don't usually do very many videos, especially this long and in this much detail. But if you liked it, comment, and I'll be glad to make more, because I like trading, I like investing, and I like sharing what I've learned the last several years. But if I don't make another video like this soon, I'll at least make a video, just a quick short video, once I see if we get a bottom on Bitcoin, if we get a top in gold, if all this stuff starts playing out and I see, whether I'm right or wrong, I'll make a video, explaining what I'm seeing on the charts and all that stuff. So just give me some feedback. Do you like this video? Do you like these long, in-depth videos that explain more stuff? If so, I'll make more. If you want to see me day trading, if you want to learn that, I used to post my day trading videos quite a bit, and then I just stopped because I didn't get much feedback. But if you want to see day trading videos, live action, I'll post that too. I trade that Monday through Friday. So let me know. Subscribe to the channel. Until next time, peace out.